reserve will depreciate further the US dollar. This is why we're in this trade in the first place. In the market in which we are trading, and we want to make that volatility work in our favor. It is already signaled, okay? So to recap on dollar yen, we would be selling current actual price at 104.5 and 104 level here, right above all the local head formations, right above the neckline itself. Okay, and our target is 101. We'll no longer bother close to that mutually. Right, our next issue is the United States dollar against the Swiss franc. We are selling into that, we remember, and have been filled, I believe. Okay, so we will want to fill 0.9160 and 0.9170. These are these levels here. Okay, this is 0.9160. So we stop fill 60 and 70 and 50. Our stop, of course, is 92.50 all the way up here. Okay, alright, so we will fill 91.40, 91.50, 91.60. You may want to fill now. See it appropriate. At 92.50, you're only doing 3% or minus $300 or for 3 minutes on a standard 10-year account. And our target during the election and probably after the election on a weak dollar. We expect to see a weak dollar in all cases, whatever happens, contestation, result, there is a clear cut victory for either candidates. There will be. So you're gonna see a weak dollar either way, and so you're gonna see this target 89, 50, 89, and 80. Okay, and that gives us about $570 a year. If you go close to 88, if you hold on, you'll see more. And if you size not very aggressively, but a bit aggressively in order to get, say, an equity of $2,000, I believe if you just double that. 4.5% or 5% risk, and we could make the 2,000 equal, which is about 20% on a standard also complete account. Alright, so our next issues are commodities now. We first go to gold. So if there will be any questions, please move on to the moderator, and we'll get through them as we move in our analysis, as we tackle our analysis. Okay, so what we need to note with gold is we have a very strong bearish momentum. We have strong bearish momentum on the 1 hour or so. This kind of momentum signals that you've finished the wave 3, and this is a 5 in wave 3, and you're definitely going to be seeing the wave 5. This is called the momentum zigzag. It's going to fall below oversold again, not all the way to here, but it will fall below oversold, and price will fall below this point, namely bearish. Okay, and I'm testing this neckline here. So we're going down very soon, which shows strong dollar support. It shows that the dollar is being really supported by the Federal Reserve going into that election. Okay? We need to take into consideration that after the election, even though we're seeing negative momentum, we do not expect to see gold fall far because only one of two scenarios can happen. Either Trump or Biden will win, one of the two candidates, and both of them have promised the dollar and raise the price of gold against the dollar. So the price of gold will rise, right? After the election, that is. Okay, whoever wins. The second scenario is that there will not be a clear winner. There will be a contestation of the election, and this is risk averse. Okay, and if people are going to be dumping dollars because of this risk aversion, usually people buy dollars on risk aversion, or traders have to catch. But in this particular instance, you will have global organizations diversifying out of the US dollar. So if such organizations or investors diversify out, global institutions, right, multi-institutional companies, that's what they're called, begin diversifying out of the US dollar, then you will see an appreciation in gold price, which is eventually priced in dollars. Okay. There's also the corona factor to take into consideration. There's now lockdown in Europe, all right, and this of course will drive up the price of gold. So this is a risk adverse event that still has further continuation, okay, or further impact, and you have to take that into consideration. So expect a bottom in gold to form right after. So expect a bottom in gold to form right after the election. Okay, so this bottom can be, we will consider where exactly it's going to be, between 1,830, 1,840. If the Federal Reserve is very aggressive, they will push that to 1,800. Alright, so we have two trades to make. There will be a long-term trade to long gold at these levels. This is wave 5 here. Remember, we got the 40, 1,828. That will be our long-term trade to buy these levels, okay, after the election. Currently, going into the elections with the appreciation in the dollar, we would want to sell these levels, 1,891, 1,885. We already seen 1,000, we probably can fill now 1,885, okay, so we will not go for the 0.618. We're selling between 1,885 and 1,890, about current level. Alright, so you could sell if you want 1,885 and leave a limit at 1,890, limit entry sell. Your stop would be 1,915, that is right about 0.2 here. Okay, and you will go for 1,840. Okay, fine. Alright, we expect more strength of in the dollar going into the election, supported by the Federal Reserve. Okay, so and if you go to 1,830, I'm sorry, that's not 40, that's a typo. If you go to that level here, then we'll be making about $1,160 in mean on a 2-minute lot. Then we downsize our entry. Counter trend, which is going to reverse quite soon, and we don't want to be caught on the wrong side on election day. Okay, so we're only selling 2 minutes today if you think that is appropriate. If you think this is a trade that is comfortable with your risk premises or with your risk premise, okay, then you could contemplate to sell 1,885 current levels and 1,890 you've seen and above. Our stop is 1,000. We're going for 1,840 and 1,830. Okay, we are of course going to test this neckline. It's clear the internal cycle will test this neckline. So you have potential to sell all the way up to actually 1,902. I believe your position. That's it here, 1,900. Okay, if you want to better values into the trade, our stop remains only the same 1,915, and okay, we would expect that neckline to break on a second test to take out our take profit. Okay, so there is potential for more dollar appreciation. If the central bank is going to dispense, the Federal Reserve is going to dispense considerable, heavy amounts of gold. If this is an engineered move, then you have to keep in mind that the entries that you take today, going into Monday, if you're going to sell these levels, 1,895 all the way up to 1,900, you may wish not to take profit at 1,840, but to place your stops at break even. And if for some fundamental reason that we have not dispensed or that we cannot really visualize, gold goes down aggressively more and there is more selling in gold or dispensing in gold by the central bank, by the Federal Reserve, could see gold all the way down to 1,805, 25. Okay, this is a measure of that motive downwave here. Then that will be some kind of a zigzag. But keep in mind that this is actually a massive, a big ending diagonal or bearish flag, and we're broken out of that. We're now testing that the last time, and we should do an equal measure to that wave. So an equal measure to that wave, 1,805. If it were more than it, there's potential for more than that, you put 1,775. The fundamentals for such a gold price are not clear, to see such a gold price, that is. However, you have to keep in mind that this could be strongly driven, all right, by the Federal Reserve. They would want to see gold at such low prices so that when after the election, okay, then the weakness in dollar will be diminished. Like now, if gold before the election was at 1,775 and after the election it was only 1,900, okay, well, it was also at 1,900 before on election eve. So there isn't, and that goes with the news about they're going to print about, or they're going to issue $4 trillion in stimulus package. So you have protected and supported your currency, or you have the Federal Reserve that protected and supported the United States dollar as the currency, of course, and this is the mandate, okay? Contrary to the general view. So you may want to hold these positions again at 1,890 and 1,885, all the way down to 1,805 and 1,775. Is the issue. Okay, this is an equal measure of that wave once there is ending diagonal breakout or bearish flag breakout. Alright, so we move on to the next issue, and that is the silver. But before we do silver, you have to contemplate now the bullish scenario to expect right, we would expect to see gold prices strengthen very quickly and very aggressively because there's going to be a stimulus package and the market will be discounting that, and then of course the price of gold will be evaluated, and so we would expect a bottom of gold at 1,840 here. Alright, and at that point we will have broken below the bottom. We will see we'll have a double inverted head, and we could on the right momentum signal, if we have strong momentum on the 15 minutes, very strong spike, then we could contemplate to buy at 1,000. We know that we should see stronger action at this level, 1,840 and 1,830. Possibly even the central bank will drive this down to 1,800. So you buy entries, limit buy entries at these levels. So small buy entries to test these levels, small minutes or fractions of minutes, they test these levels all the way down to 1,800 on the belief that there's going to be a strong response at these levels anyway. Okay, and in that case, we believe we're going to go to 1,900 and 1,930 to retest the neckline again. Rejection, first time with a neckline, then we would take that out on the stimulus package. As the market discounts the stimulus package, we'll be going to 1,170. Alright, back to these old figures that were very lucrative to the gold bucks. That were very, of course, lucrative projections. I remember they were projecting all the way up to 2,150. Alright, and this we could talk here as the stimulus package gets finally approved in Congress, alright, and by the new administration. Okay, so you would want to take that into account. You could, okay, the entry is 1,865 on the belief that this is when you will be able to confirm that the bottom has been set at 1,865. Seems logic. The stop would be 1,840, and then of course you go into 1,930, the trend line, and 1,950 and 1,970. Okay, for 3 minutes you would want to add to that position, load more than the sell position, because this is probably the fundamental fact. It should occur around the election. Okay, until the 9th of July. Okay, then we move to silver. Alright, this is the current technical picture. So if you were considering to sell gold, you should be doing that right now, because I believe the market will stop. And that is 4 is right below that for the average. So I might just get another spike to 1,890, and I think the correction is done. Alright, so for silver, it's pretty much the same story. We will, of course, buy today and on Monday our intraday trade. We do that one right about now. We're now buying the dollar strength, so we should be selling into silver. Okay, so like it's written here, US dollar strength for equity meltdown. Alright, what's happening now is not, of course, an equity meltdown, but it's people are squaring their positions and getting out of equities. They're even getting out of companies that are using silver as an industrial. Okay, and this is going to bring the price of silver down. So we would want to sell. Okay, we tested that neckline. Okay, alright, we already did break below that neckline and tested that neckline at 2250. So the next rebound should test that blue neckline here, and we would be interested to compile a sell position today and going into Monday, going into the elections at 2380 and 2360. Price is currently now 2360. Show 2380 and 24. On the function that we will see 24. Alright, that's it, 24. Okay, so at that point, at 2380 and 24, our stop will be 2480. That is that level here. Right below the, right above the shoulder. And we would expect to see a target at 2050. 2050 is right. Okay, this is not guaranteed, of course, that you're going to see that kind of target, because when risk aversion ends and there is weakness in the dollar and there is strength in equities, if there is a clear-cut result, election result or electoral result, then we will see that the dollar will weaken on hopes of stimulus. Even if there is not, then the dollar will gradually weaken as justified due to political turmoil. Either case, you would have to consider that your target may not be 2050, it may actually end at 22, alright, 2250 or 22. So whether if that should happen, okay, we would expect to see an inverted head, alright, somewhere here at 22. This inverted head, of course, even if we go down to 2050 at 22, will occur. We will get silver as a commodity, alright. It is not like trading currency CFDs. This is linked to a commodity and it has ethnic value, and the ethnic value of silver at some point, the ethnic value of any commodity will not fall below a specific level. Okay, so you cannot expect to see silver. It may spike, to 20, this level short. This level is quite short here. May spike to 20 and 2050, but this is a very low price, okay, for the commodity, and therefore it is not, we have to consider that it's very probable, given that there will be correction to risk appetite by late Monday, that instead of seeing the multiple heads here, inverted head here and inverted head here and then shoulders again, you could see that inverted head at 22 or 2250. You have to observe momentum very closely. Remember that that was a 1, 2, 3, and we did 4, and we're currently doing the terminal 5. Okay, so that terminal 5 could equate with 3, same levels at 22, to go beyond fundamental premise for that, and I don't think it is, because either way, alright, the dollar should be depreciating, and therefore silver and gold will be appreciating. So we may not see these levels, this $22 level now. And of course it could truncate, meaning that the 5 could end right above the level of 3 at say 2250. Short term position, that day trade position that we do today and again until Monday, theoretically we could leave the targets open to 2250, just like the matter with gold here. It said that theoretically speaking, you should be prepared to leave your gold target all the way down to 1,805. Just in case there is strong interference like the entire reduction until after any contested results has been resolved. It is very probable that the central bank will keep selling gold and supporting this currency, even if there is a contestation in results, until this issue and this matter is resolved. They won't be surprised, okay? So to see this. This is their job, and they will be prepared for it. And they have their deep pockets for that, so you would see 1,000. And you would also, to the surprise of everybody, remember that when this happens in such commodity markets, there is a flash crash and there is turmoil, and many investors and traders become dumping positions. And this would even accelerate the pull. So at that rate you would see 2250, or sorry, 2050, alright, and you would need to keep your target open. You would not place, you would need at least to place your target at 2050. You will just need to be prepared. If that is not the case and there is reversal in equities and commodities, that you could see that reversal earlier, alright, at 2250 or thereabouts. Anyway, by then you would have placed your stop set entry, so you're already safe. Okay, and that's what we will have to be prepared for it, for that. If we're not going, this is the police scenario, there are clear election results and equity markets will rally. Okay, and in that case, instead of having, you will be having this head and shoulder multiple head position, inverted head position that we show right about here. Okay, these are these two inverted heads. Alright, and we would want to take out that neckline again to become bullish. Remember, we're always talking that we want going in correction A up, alright, all the way to test these lows again, 50% of these lows, this cycle, and that is again continuing. Okay, so we would want to get into that position, and at that turn in the market, we would be seeing, of course, at 22.50. Alright, remember we already did a market bottom at 22.50. Alright, so we could be seeing another likely below 22.50. We may want to long back, we should be prepared for that. We will be seeing double heads, local heads. Alright, and if we go higher, then we know that there's a market reversal. If you start making higher highs, alright, and no more low lows, then you are seeing an inverted local head and shoulder position, and you're going to reverse your entries to enter, of course, somewhere at 23.50 again. Okay, and after taking out that neckline, you're on your way to that position is not shown here, unfortunately. Okay, that is still a sub position. So that long is not shown here, but it is, we envision that it will not be right, probably towards the end of election day. Okay, alright, so that's it for silver. To wrap up, we would want to sell into the current correction, because there's dollar strength. We expect that there's dollar strength, and there will be continued dollar strength all the way into Monday, and you have opportunity to sell all the way up to 24. Okay, so this is the level. These are the levels shown here, 24 and 26 weekly. We sell these and we go for 20.50 or 22.50. We already explained which is which and why, and our stop will be 24 weekly. That is right about 20.50. Okay, so that's 22.50 and that is 20.50. Double inverted head. Right, and the market bottom out. This is probably around the 50% fib of all that rise, and the market would then, of course, after doing the respective successive bottom last year, after doing the head and shoulder, local head and shoulder bottom, will bottom up to Alright, so we go on to our next issue, and that is oil. Okay, so of course oil will be going down aggressively because of the corona pandemic. We have a strong sell signal, and this is what we expect to see. Okay, and this is what we would anticipate to do. We will not change the market. It is possible that the market will still go down from here. We are saying it was a bear flag, and this is a running growth wave that is Friday, and we will not sell into that. We would rather expect that having finished an EBC correction and X, and that he has potential to correct all of this wave. Alright, as a corrected wave. So we would rather sell higher levels, 37.8 and 37.2. And these are the levels that we show here. Okay, we're even selling high. And 38.25 and 37.25. So we are correcting this complete wave right up from X to A, and that is showing oh yes, okay. So because of the volatility involved now, the elections coming and the market volatility concerning commodities, there will be a lot of volatility in gold. Okay, we would rather not sell the dips. The dips here are giving us 37.9. Alright, we will sell the top of that. Current correction should attempt to test that neckline, which takes us all the way to 38. Okay, that's it here. That's the 850, and that's the other arrow, and that is the full recovery. The high strip at 37.75 and 38. This gives us our best entries and our best risk reward ratios, because at these levels we will only take stops at 40, and 40 is right above the top of X and right above the top of A, or the bottom of the initial reading. Okay, so it would constitute the trend reversal if we get that high. Then alright, and we will then of course go down into C, and we expect to see 34 and probably 33. So our first target is 34, that means we 1 to 2.5 risk reward. Okay, 33 is not available now on the current risk level, so on the current pivot level down in November, about to take into away. And we could watch to hold that all the way down to this level, should be 33.10. And let's take about 33.10. These are projections on this current growth. This will be down to 33.10. Okay, alright, so to wrap up the oil, we expect now the market is doing an ending wedge. This is essentially a bullish pattern, but of course at this point we still have an ABC to go down, and then we have a double zigzag. We talked about that yesterday. Currently we should test that neckline from here, and then we will sell at that. This gives us levels of $37.75, $37.75, and $38.50. So we will sell $38.50 or $38.25, $37.75. Our stop is $40, right above wave X here, and right above the bottom of here. Our target, initial target, is this dotted green line here at 34, which is actually the top of 1. Alright, somewhere in the price history. Okay, and there is strong potential that by the beginning of next week there will be a new month in play, and we'll see different pivot levels that are lower than 35 to 40, and probably to 32. So we could take that all the way at least. suffice in prolonging our fast. Okay? We can just see nickel and move. That's nice, but I don't think we should be investing into these going into the elections. It's better to keep your ammunition is that you keep your account ammunition focused on the US election, the coming week. Okay, alright. So we were anticipating yesterday that FOC has bottomed. Definitely it does not look like bottom yet. Some kind of an ending wedge, and it takes us down to 338. So that's 338 is exactly the top of high here, the top of one here. Right, so we will not get to that level. So 338 is right below the cycle translation level and the top of one. That is important here. Okay, we would have potential to do that, and we will just stand down until we see the correction comes. Actually. It's the same situation for copper, of course, and so on. We're going to retest. We did approach 3.4, so we're going to look low. We're going to retest that to 3.8.